Everyone who's even a bit close to stock market probably heard of smashing earnings presented by Nvidia last week. It literally crashed the scene. But the question that right now appears is whether this trillion-dollar company growth sustainable. My take on that will be probably more sour than most of the analysts, so get ready for the worst, but expect maybe the best. So let's head on to our presentation. This is Wall Street Station channel. Every day at 8 a.m. ET time, we'll present you the most updated outlook for the stock market, crypto, commodities, and so on. So if you wanna be on time with the most interesting and the most important news, just subscribe. So without any further ado, let's head on. So is it not too late for Nvidia? So we're gonna talk first about the earnings season. Right after, we'll get through fundamentals, risks, technical sentiment, macro, and the final thoughts. So let's head on. So let's have a look at earnings once again to get a reference point for our study. So Nvidia's financial performance in the last quarter exceeded analyst predictions by a significant margin. They reported 13.5 billion in sales and earnings per share of $2.45, surpassing the expected figures of 11.2 billion and $2.0. So let's look at data center revenue growth in comparison to other companies. There is AMD, right? They're noting minus 11% and Intel minus 15% on a year-over-year basis. So it means that right now Nvidia may feel like invincible, but if we just have a look at the AI division, generated 10.32 billion in revenue, marking a remarkable. It was 171% year-over-year growth, and greatly outperforming analyst forecasts of 8.03 billion. So this robust earnings report may really trigger this hype and really invalidate the significance of artificial intelligence in the tech sector. However, even though it may instilling optimism in the broader financial markets right now, what about the point of view that everything may be already factored in price? So there is Nvidia's prominence in investor discussions. There is many hype around the sector, many hype around this very loud name, but can we really get through these earnings once again, and can this further growth be somewhat permanent? So for this one, I would like to send you to the forecast for the company. And right here, you can find that Nvidia also forecasts $16 billion in current quarter sales, surpassing analysts at 12.6 billion. So it gives a fuel. It gives a fuel for the stock to rise even further. Following these positive results, Nvidia stock has surged at first up to $500, but what we can find right here is this threshold, that psychological $1,000 barrier has been rejected, but we will go to technicals in a moment, so stand by. For now, however, let's discuss this over. Nvidia forecast at $16 billion for the trillion-dollar company. It's absolutely crushing. So can anything go wrong? So let's find out what are the possible risks for now and why I do standing on a sideline when it comes to possible decision on investment. So we are heading to a global risk, and among them there is a supply chain dependency. By now there was everything by 2019, everything clear. So America was cooperating with China. China was taking advantage of it. And right now, after this supply chain disruption time, after the post-COVID era, all of the things that were going through China right now has crashed. So America need to circumvent, due to regulatory pressure, circumvent that East Asia type of a site of factory, and that's why in order to produce the chips, we need to, for now, take an advantage of Taiwan Semiconductor in terms of Nvidia, Taiwan Semiconductor manufacturing, but it's still the Taiwan, the very reliant region from the China. So this reliance on external suppliers can pose challenges in meeting high demand, especially with this supply struggle to increase production capacity. Let's look at next, potential for oversupply. So we have really gone through that the projection for Nvidia is to get this 60 billion dollar in current quarter sales, but it poses a risk of oversupply. So there is a concern that the companies might order more chips than they actually need. Right now there's a AI boom, and as we do know, it goes on with waves, not with just a parabolic type of a movement. Back in the early years of Meta and Instagram, we've all told that there is a AI coming over, very imminent, but it really, this hype really has slowed down. And will this demand for Nvidia product regarding this get a sustainable? That's the question that I just wondering right now. Also, geopolitical risks. We are once again getting back to this China historical reliance on US right now, as the US government is, I would say, finding a risk to this cooperation may lead to permanent losses in one and the second side. So it eventually may lead to a real crack on investments in any type of China. So it may, along the way, could impact Nvidia's sales and also supply chain stability. So that's the first things. Right now we are getting to inside sectoral risks. So even though there are no doubt about the sustainability of the current AI chip demand boom, many tech transitions in the past have been followed by a period of reduced market uptake. So raising questions right now whether this long-term strength of this chip market may persist. So the next competition and market saturation, that's also very important. If you are investor, the serious investor may need to really question whether the market in which Nvidia is revolving is not saturated. For now, Nvidia currently dominates the AI chip market, so it's absolutely positive for the whole structure of the company. But in terms of competition, it may look like there will be many of the companies that will try to catch up and even beat the Nvidia's type of a challenges. So right now, it may really pose a risk to its future growth prospects, even though the AMD looks like lagging. Also, the Intel one looks like it's somewhat at the tail of this chase, AI chase. So for now, it's still kind of quiet right there around Nvidia. When it comes to the leader, Nvidia is definitely the one. Sorry for my voice. but maintain. And that's absolutely the thing to ponder. And the last one, managing growth. That's absolutely very crucial as for that type of a astronomically rising company. For those names that have experienced rapid growth, we may go through a kind of a difficult things related to projecting the projections that those significant increase in revenue may pose a risk on effective growth upon a time and ensuring whether it's sustainable without any disruptions with that challenge. So when the company is rising too fast, it's also posing a structural risk on its I would say the operational type of a side of a running company. So there were the inside sectoral risk. Right now we are jumping to the technicals. So if you don't know what technical analysis is, it's a kind of, in a simple words, the distribution of supply and demand structure on the market in a time horizon. So right now, if we just want to study what the market is telling us, we need to study the candlestick patterns and also what the type of a price structure we are dealing with. So for this one, all right, so we are right now with on TradingView, and only let's maybe take this 4-hour chart and zoom in. So on 4 hour, look at this, it's $500 right here. And what just happened right there? It looks like there is many profit takers, I would say, at just this psychological important threshold of $500. So when we are hitting that key points on a price price structure on the market, it usually is not really irrelevant for the further price behavior. So this time 500 has become a very serious obstacle for the bulls, and with this Marubozu candle on daily, look at this Marubozu candle that is that's a strong bearish candle without any type of a strong wicks up or underneath. It means that there is a absolutely bearish bomb that is right now defending bears from going outside of 500 and upwards. So before it will get crushed, it will take a much of a time. It doesn't happen very often. Right now, only weekly we have a shooting star. It may be with some a positive context, as this shooting star is formed with a bullish tone. So it means it closed a bit higher at the end of the week than it eventually opened. But on a daily, it's absolutely something that is bearing the biggest concern of mine. And every single chart is like an live organism with a heartbeat, and this heartbeat tells that the symptoms of the market may push us back down lower to at least 404. However, there is one positive aspect of it, that this $400 area is being defended also by bulls with this very strong bullish reaction. So it will be very interesting to watch where we may get through between this I would say pull attack war between bulls and bears. So let me know in the comment section below the video what you think about it, or in the chat right now. I will just find out what's your point of view, and maybe get back with comments right after. All right, so it was about technicals. Right now let's analyze the option chain, and we can find that open interest on strikes and calls is right now the biggest one at 500 $500 with a expiration of 1st of September. So it means it's absolutely optimism skewed to the upside, and with the puts, the highest open interest is right at the as you can find right here, 450. So it means as we are right now dealing with 465, it means that it's more likely that we'll just hang on within this area of 500 and 450. However, as the open interest at 500 is that huge, it's less likely that the 500 will get eventually accepted by the market, as normally when the highest open interest for puts is significantly lower than the highest open interest for calls in an option chain, it normally suggests a very bullish sentiment also, or positive outlook for the stock. And this time, I would say with this lowering sentiment on the market, as you can find right here, just at the 50-ish, it will be very difficult to climb back again to next area before a stronger correction in time. So for the time being, I do expect that that the market will try to fight with this 450 bucks, but I would find that it will eventually get rejected and will eventually lead to a 400 bucks. However, we are still ahead of very important time for the markets. So there is 3 months of a supposedly great returns because it's the last quarter of a pre-election year. That's what I meant. All right, so option chain was out, and right now, can macro effect, we are right after the Jackson Hole event, and the tone of Jerome Powell hasn't eventually changed by then, so I do expect that price indexes may fall even further, and also wage growth will slow down. So it's absolutely one of the outlook that may favor the growth of the Nvidia stock, but with the type of a service inflation currently at 4 to 5%. It means that right now the ongoing work from Fed will be needed, though recent interest rates are expected to assist in managing it. So for now, for the time being, I don't find that this will be kind of any type of a risk for Nvidia. So the macro is still finding a place in this recovery phase for the economy, and also for technological stocks. It may both eventually well. So what my final thoughts for Nvidia right now? So I would say that Nvidia sells AI cards to everyone. They have over 80% of the market share for AI cards, and those things are selling like a hot cakes right now. Anyone with an inkling of interest in using AI is using Nvidia cards right now, but it may change with eventual turning up and boosting the competition of AMD or Intel and other startups. However, for now, the share of Nvidia dominance is absolutely unthreatened. Anyway, I'm not really the one that is willing to buy the company at such overstretched type of a price structure. So for now, the PE ratio is at over 200 points, and it may get eventually to a doom scenario when we'll slip 10 or even more percent just after earnings. Very often, the earnings type of a market cycle is very often directed and focused to profit takers, and that's what happens right now. And by analyzing the market structure, we may just also find that it may take this take the place this time. So I do find that it's all chalk up to a hype to some extent, but still I don't wanna short the Nvidia right now. So there is hype, but there is still a risk for bears that will go upwards anyway. So dollar cost average, or just waiting for the better signal out of the price action type of a approach, is I would say highly decent in terms of the strategy. So you may buy a stock out to every quarter and do fine, or otherwise just wait for a bigger tumble and right after load up your bags as you can. Or I'm just kidding, because you don't want to be really over diversified in your portfolio, but you may just consider in buying Nvidia with even 20 to 30% of your portfolio if bought at a decent place. So that's it in today's episode. Thank you very much for watching, and if you have any questions, just don't hesitate to put them in the comments section. Thank you, and bye bye.